So I also have a fun little saying, and it's like, if we can start this a little off the beating path for Forbes, but if we could start to talk about sex, I think we could start talking about checks. Like, that's my little fun saying.
Hi, everyone, and welcome to New Money, where we talk to movers and shakers about how they made it. I'm your host, Rosemarie Miller, here with Jason Tartick, author and founder of Trading Secrets Podcast. Thank you so much for joining me today, Jason.
Thank you so much for having me.
So, Jason, you just wrote a book, Talk Money to Me. What made you write a book right now?
Yeah, so this is actually my second book. My first book was called The Restart Roadmap. It was very focused on career navigation and making sure that you're leading your career as opposed to like the blueprint that life will put you on. And so I was thinking about my next book, and I've been doing a lot of work in the personal finance space. And I said, there's a lot of love books out there, and there's a lot of money books out there. My background, MBA, accounting and finance, and I was a banker by trade and entrepreneur. So I'm a personal finance expert, but I also have a connection to the Bachelor franchise, which is about love. So I said, how do I take these worlds and marry them? And I recognize that there aren't many books about love and money, yet we know that money is a huge contributor to our success in love. And unfortunately, in the United States, there's also a lot of research that shows we're struggling in that area. So it's a book that helps individuals prepare for their financial well-being, but also to prepare for the well-being of them and a significant other. So it's for singles or people in a relationship. But the idea is we can't improve our money unless we start talking about it. So it's called Talk Money to Me.
You know what? You have a point, because isn't like one of the top 3 reasons people get divorced money issues?
Yeah, so money arguments is the second leading reason people get divorced, behind infidelity, right? And there's some other statistics out there that say 73% of couples source money as attention. And in that same study, half of the 73% say it impacts their intimacy. So now we have a topic of like literally just money, and it's impacting the intimacy in our relationship and the success rate. So it's a huge topic of conversation, and one that we need to dive into.
And so in this book, you have 8 essential questions that you should have with your partner. So how did you come up with those questions? Was it research? Was it life experiences? What?
Yeah, so it's interesting you said. So the thing is that I find that stories can shift, especially in this world. Context can change, but there's this overarching theme that numbers don't lie. They tell a story, right? And you can't change them. You can change them, but you can't change the context when you see the number. So every chapter in this book is a question, and the answer is a number, right? Which is objective, not subjective. It's a number you have to know about your personal financial well-being, and one I suggest that you know about your partners, and then how to improve it, and there's resources to guide you through that, and then how to have the conversation. So the numbers are actually very connected to my banking days, because I would have to underwrite loans for individuals, and then I moved up to the fact that I was underwriting loans for large corporations and then lending to large corporations. So the idea is, why don't we use the bank's benchmark for what they look at to understand what they will lend to us and the rate at which they'll do it. So it's a little insider information that these numbers are actually the numbers that the system is prioritizing when they look at your financial well-being. So it brings you through the A to Z all the way down to what age do you want to retire and why.
Oh, wow.
Yeah.
So could you give us some tips on what we should be discussing with our partner regarding money?
For sure. Well, I think first and foremost, like, I can get into the nitty gritty and the details. The first thing is we got to start having fun with money. Yeah. Like, we hear money and we get scared. It feels like it's icky. I mean, we're not even prepared. If you look at the research, us as individuals aren't prepared to think about what we earn and then how to go negotiate for ourselves. So how are we going to be comfortable talking about other people's money, right? So the basics are, let's have fun with this. So even on like a first date, you can joke around. It's a good way to know someone's spending behaviors. Be like, all right, you win $1 million today after taxes. You gotta spend every single cent. What are you gonna spend it on? Okay, another fun one to ask is like, all right, unless you went completely broke, what is one thing you know you overspend on? Like, what is it and why is it, right? Or like, what was the craziest purchase you just made in the last 3 months? Like, how much did you spend on it? So there's ways to have like fun with this that we can learn. And then we can dive into the specifics. I think some of the 3 big specifics you gotta know, especially when you start living with someone, is their credit score, You want to know what annual expenses they have, so outflows, and then income, what comes in the door. Those are 3 big starting points that you need to know, because my whole philosophy is that your net worth is not your self-worth, but we have to disclose this stuff so that there aren't surprises, because it's not that individuals are in a bad position financially, it's that we're just not talking about them. As a result of that, we feel deceived, and that's impacting relationships. So I think that's a starting point, though. Have fun with money conversations. Once you consider cohabitating, you got to know credit score, you got to know outflows, and you got to know inflows.
You know, growing up, I kind of heard it's rude to talk about money. So how do you actually have that conversation? I'm in love with this person. We're about to move in together. What's your credit score?
Yeah.
How do I
Show me your credit score.
Right.
No, 100%. So I think first and foremost, like any type of vulnerability, the best way for vulnerability, which we know creates connection, is show your cards first. So I have a podcast, Trading Secrets. We've had over 150 episodes, and we're a top 25 business podcast. And people always say, how do you get these individuals to talk all about money? Well, I get them to talk about money because I talk about money. I showcase all the numbers first. Every episode, I talk about how much I made that year. I talk about where I lost money, where I made money. So if you lead with vulnerability, people will be vulnerable with you. My take on money or credit score, or anything, is that the system, this is my thesis, the system has put in place this form of etiquette that we shouldn't talk about it. But I feel though it's in place truly to benefit like the massive, massive profitability at the top. If we talk about what we earn, I can then learn about other industries. I can learn where people are making money. As a result of that, maybe I can earn more money. If we talk about where we spend and how much, as a consumer, I become more educated. So if we could stop putting a negative connotation to money and actually look at it as a form of education, we could recognize it's only helping us when we start having conversations about it. So I also have a fun little saying, and it's like, if we can start, it's a little off the beating path for Forbes, but if we could start to talk about sex, I think we could start talking about checks. Like, that's my little fun saying. But I think there's ways to do it, and I think one of the things is just saying, we know that the statistics are working against us with money and relationships. As a result of that, are you against possibly just maybe opening up and showing each other where we're at and why? I think the other thing too is when you talk about credit specifically, you could look the first quarter of 2023, the average house price was around $438K. Okay, so let's just say the average home price, we'll make it simple, is $300,000. If you look at a $300,000 loan over 30 years, someone that has a great credit score, 760 and up, versus someone who has a below average credit score, 620 to 630. Same house, same price point. This couple is going to pay over $100,000 more in interest. So why don't we just have these conversations? Because then it's not a form of judging or weaponizing. It's a form of saying, let's improve this so we can improve ourselves.
Yeah.
And I think that's the approach that you need to come at.
Oh, wow. That's a big difference.
I know. It's crazy.
But I understand what you're saying. Okay, lead with vulnerability. But I feel like if you're showing me your 800 credit score,
yeah.
and I'm showing you a 400 credit score. That's like you showing me, as you said, with sex.
Yeah.
Your clean STD test and my dirty test. I still don't feel comfortable doing that. So what tips do you have for someone who may be in that situation?
Yeah, for sure. I think that's a great example in a tough situation. I agree with that. But I think one of the things is in this world, especially with money, is units can help one another, right? We know that if someone has a 400 credit score and they're actually having the conversation with their partner who has an 800 credit score, if there's trust there, there's different strategies that you can implement where that 800 credit score can pull that person up into the 600s, into the 700s, right? So we know as a result that if you guys work as one, you can actually improve that number. I think one of the biggest issues is that we leverage and then weaponize, right? So we hear the 400 and we instantly connect it to an example like that, like an STD. And I think we need to understand that we all in America, every single person, even that person with an 800 credit score, we are all dealing with some type of financial challenge that we need to overcome. Every single one of us has hurdles with our finances in some capacity. It could be spending, it could be savings, it could be retirement, it could be debt management, it could be anything A to Z, but we all have them. So as opposed to saying, because you have a 400, I am going to put you in a certain bucket as it relates to finances, is irresponsible of that person, because that we know is not the case. There's some people with 400 credit scores that are multimillionaires and even billionaires, right? So a credit score does not define you. And it's a tagline I'll continue to say is like your net worth is not your self-worth in any capacity. The problem, though, we've learned, it's that no one is talking about it. That 400 to 800 credit score, it's not happening. So step one is like, get there. Step two is how do you work as a team to overcome it? The biggest thing is do not weaponize money, because if you do, you are creating the same solution that got us here to not talk about it.
Well, Jason, I want to talk about the man behind all of this amazing advice. What is your earliest memory of money?
I would say my most memorable memory of money is going to be, because it was early too, was my grandfather. So he was an oral surgeon and a professor, right? So highly educated, great profession, but he always outsourced his money management to an advisor. And unfortunately, he was being taken advantage of in a really tough way. He found out, and he had to pay an exit fee of 10% of his entire net worth to get the money out, based on contracts where they're set up. Now, this was 30, 40 years ago, right? So the times aren't today. Regulations today that exist weren't in place. 10% of his net worth. He took it out, said it was the hardest lesson I learned, but it was the best lesson I learned. And as a guy that only had healthcare expertise as an oral surgeon, he taught himself how to manage money. He said, I'm no longer going to be oblivious to the biggest asset. And so he taught himself how to manage money, how to invest money, all the things. And so at 16 years old, he sat me down in his office, and he managed the money for everybody in our family. And he showed me every single dollar he earned, every single dollar in my parents' account and my grandmother's account, and everywhere, what they were invested in, why they were invested in. And at 16, I was glued to the screen. And what I recognized, what he was teaching me, is that through this transparency, you're going to learn lessons that's going to improve your overall financial health and wealth. And as a result of that, not only did it do it for me, but now I'm so passionate about trying to do it for others. And so that was at 16. It was one of the best lessons I ever learned, was show the numbers, learn the numbers, understand them, don't judge them, want to help them. As a result, you'll be in a better financial situation.
Is he who inspired you to get a business degree and ultimately get an MBA in accounting and finance, right?
Accounting and finance.
Yeah.
That was my first time that I connected, numbers and money and seeing someone's life's work, and I just got obsessed with it. I was like, I know my direction will be in this space. And so unfortunately, my grandfather passed away in July of 2022. But in the book, there's some pictures. I got to show him my first book, and just to see that full circle moment was pretty cool. Yeah.
I bet it is.
Yeah.
So let's talk about that. You knew that numbers, that's kind of what you were meant to do.
Yeah.
What was your experience like when you were a banker?
Yeah. When I was a banker, I just loved the industry because, again, especially in this world, there's so many different things happening, and it's hard to angle and understand people. There's passive aggressive communication. There's so many different forms of communication. But what was interesting is the numbers just always made sense to me. But what didn't make sense to me sometimes are people. So I had the fortune in this bank that I worked for, because I was an accelerated program, I even got to spend a week at a teller line. So everything from being a teller to working under a head executive at headquarters in strategy to then lending over $100 million. I got to see all positions A to Z at the bank. Probably my biggest takeaway is do not judge a book by its cover. In the retail space, I remember people would come in and you would assume what their wealth would be based on what they had or what they were driving or what they looked like, and then you'd sit down and go through their financials, and they either didn't have anything or everything, and you're shocked every single time. And I think what's interesting in America is households with over $250,000 of household income, 61% of them are driving Hondas, Fords, or Toyotas. So I think we live in a space where we're actually, you hear this term gaslighting in relationships, we gaslight through our assets. We try to showcase something that exists that don't. At the bank, I got to see all the numbers. So they could have a front of they're wealthy and healthy and thriving, but I got to see the numbers, and that wasn't always the case. And so for me, I always found that fascinating. And then I also found it fascinating that small little tips and tricks that you could give businesses can instantly impact those numbers. So just using numbers as a scorecard to see what we're putting into them and showcasing how that can evolve them or grow them, it's just a fascinating thing for me. Maybe it's the whole idea of like direct input equals direct results, and with numbers you can see that.
Well, that seems like the perfect career for you. Why aren't you still a banker?
Well, that's the million-dollar question there. So I was grinding 10 years, got my MBA in accounting finance, moved up the ladder, relocated 4 times. Longest move was from New York all the way to Seattle. I didn't know one person in Seattle, but I chased the title and the signing bonus for the new job. And I eventually got burnt out. So I was 29 years old. And I remember I was actually in this meeting. It's a big pitch. And there are 20 executives in there, and we're trying to win this client. My job is to do anything but screw up. And right when we're starting, I could feel like this anxiety coming over me. It started to get tight. I was like, oh my God, what's happening? And immediately before the pitch started, I was like, can I go to the bathroom? And the executive was like, what? I was like, I gotta go to the bathroom. He showed me. And I run to the bathroom and I close the door and I pass out right there, right in the bathroom floor of a CEO's office. And I get back up, get my stuff together, go back to the meeting room. But it was a wake-up call for me. I got home that night, I'm like, what was that? Through therapy and meeting with psychologists and stuff, I think what I learned is that my entire identity was lived through my career. Yeah. So I kind of lost track of who I was. So I'm in these meetings trying to live up to the expectations of everybody else as opposed to just being me, and as a result, lost myself. Ironically enough, it was around that time I was really feeling burnt out that, of all things, ABC calls me to go on a reality dating show known as The Bachelor. And so I took a wild leap of faith against what everybody in my circle, internally at the bank and externally friends and family, had advised. And I ended up going on a reality TV dating show. Go on the show. I came in third, came off the show. This is 2018. And I quickly learned about this business in digital marketing and content creation. And I learned that it is a massive business with huge growth upside. So I went back to the bank, and for a year I double dipped working in content creation and in banking. And what's crazy is on Instagram, and I'm very open about money with just, at the time it was like 300,000-400,000 followers. Yeah. I was making much more money than I was as a senior vice president at a bank.
Wait, how much were you making at the bank?
So like at the bank, when I signed my deal to go to New York to Seattle, this was in 2017. It was a $110,000 signing bonus. Mm-hmm. My base was $165,000, and then based on your production, your base could be like 2 to 3x that based on what you produce. So that could be a $500,000 job plus stock options, benefits, 401k, 6% match dollar for dollar. And within the Instagram space, I was making more than that. Really? And so when it started to outpace, I was like, wait a second. And not only was it outpacing, but you post a photo for an ad for a brand, again, back in 2018, and I'm like, the margins are disgusting, right? So if I got contracted to do a deal for $30,000 for a picture post, I had to pay my agent a fee. Let's just say it's anywhere from 10 to 20%. The rest of the margin was me. I didn't have much work. I took a photo, I edited it on an app that I bought for $3, and boom. I've never seen a business like that. So I dove all into the business, building my platforms up, but then also learning that I could help other people do it. And so it was in 2020, I started a talent management company.
Let me stop you there.
Yeah.
Building your platform up, how did you learn how to do that?
I just dove in and I was a sponge. I asked everybody. I called people on previous seasons. I called people in other reality shows. Now that I was on a show and had a stupid blue check mark next to my name, I knew I could get the access of individuals in the space. Yeah. I met with tons of agents, tell me how this works. I want to understand. I would meet with attorneys and take contracts and say, hey, show me what I'm missing here. And I just dove all into it. And so it's just being a sponge. And the other thing too, and this is such an old cliche thing to say, but when you find something that sparks some kind of passion, you're not viewing it as work. So going all into it, it was just my curiosities that I was exploring. It wasn't work. It ended up turning into work. And what I would tell people is people that are lost, like within their careers or finding that passion, just take a beat and take your notes app and just look at naturally where your time and energy is going. What shows are you watching? What podcasts you listen to? What news do you read? What type of food do you consume? Where, when you have free time, do you go? When you get little butterflies in your stomach, what is it? Is it from partying? Is it from getting a shot? Is it from sleeping? Is it from going to the library? Is it from taking a walk? Behind all of that are billion-dollar businesses, and you can find a career within those businesses. And so that brings me back to I just had natural passion for it.
So today, what is your highest source of income? Is it still social media?
Crazy enough, it's still content creation for my brand, right? So I have a podcast, I have 2 books, and then I create content in the business and lifestyle space. So that is still the highest margin business for me and my brand. That's a 7-figure business. But we have the agency now, which is on track. You know, our goal this year is to do $10 million in revenue. As everybody knows that owns businesses with that type of revenue, you have to invest back, you want to invest in people. So the end of the day income obviously becomes less and less, especially when you're bootstrapped and you're growing individually. But that's a big business that I see like long-term exit, like the big money will be there. And so, yeah, that's a little bit about that.
So Jason, why did you decide to create a business brand although your personal brand was booming?
Yeah, that's a really, really good question. So I got off the show and I got in this deal with Colgate. And it was a toothpaste deal. And so it was great, paid great and everything. Well, there was the next guy that from the next season came off, and I joke around, and it's the truth. He's taller than me, he's better looking, and he's more jacked, right? And so he had more followers when he got off the next reality show. So Colgate went to him and did a deal, and when he did that deal, I talked to him because I talk money, and he got paid more than me. And I was like, of course he got paid more than me. Like, more relevant, has more followers, and all the other things I mentioned. And it was that moment I was like, if I don't differentiate, I will forever be paid less than the next guy and the next girl and the next guy and the next guy. So I was like, I need to tap into what I know best. I need to tap into how I can differentiate. And so the big turning point was in March 2020. We all know what happens. Pandemic hits. Market collapses. Everything is shut down. It's a mess. Every headline of every page is S&P 500. So I went to my Instagram stories and I just put a poll out. I said, be honest with me. Don't lie. Be honest with me. If I ask you right now to tell me what the S&P 500 is, could you do it? And over 300,000 people answered the survey. 91% of them said they couldn't effectively do it. And so it was that moment I was like, wait, I have 10 years in finance and banking and lending. I can help people with this new platform sparked by reality TV with what I know best. Yeah. And so it was that moment I really started to dive into the personal financial content. And then what happened is a couple big banks and credit cards and apps, they came knocking on my door and they wanted me to do content. Well, that content was a lot different, right? Maybe we're talking about the differences of structuring an S Corp versus an LLC. Maybe we're talking about bonus depreciation when you buy a certain piece of equipment for small business owners. Maybe we're talking about how individuals can get the best bang for their buck with signing bonuses and where to go for credit cards. Now, if you take those deals and you go to that next, lead from the show or whoever they might be, 9 out of 10 times that's not their expertise. As a result of that, they might have more followers, they might be taller, faster, stronger, but my rate's going to be more than them because I have a unique, differentiated skill set. And so that's when I realized the importance of niching down to like what you do best.
Yeah. And do you believe in 2024 that strategy still works?
Oh, I think it's massive. Yeah, I think jack of all trades work is going to be gone before you know it, especially with AI. Like, you need to tap into your gift. Everyone does, because we all have a gift. And if you are not locked into that and you're not working on it every single day, I think in 2024 and beyond, you're going to be left behind. Like, our system is set up to be jack of all trades, but unfortunately in this space, can't be. And if you learn from history, all the people that have achieved outlying success are amazing at one thing. I don't expect everyone to be a legend. I don't expect everyone to be a massive outlier. But if you could just be above average at one thing, I think you'll find success in whatever it is that you want to do.
Well, Jason, I'm going to ask you some money questions that I ask each of my guests.
Okay.
First, where do you put your investments?
It's a great question. So I'm stubborn. And I, for so long, was like, I know money. Grandpa Lenny taught me I will manage my portfolio. I then realized opportunity cost of capital. I don't have enough time to do it. I just don't. I don't have enough attention to give it. So my focus right now is building businesses and providing as much cash inflow as I can and being intelligent with my cash outflow. As a result of that, majority of my wealth I've recognized I have to outsource. And so I work with a planner and I was also able to weasel my way into the ultra high net worth group at UBS. I don't have the net worth to be in that group, but I was able to, convince them that I have a network that I should be in their group. And they were sold. Why did I do that? Because they have access to certain investments that retail investors don't. As a result of that, I'll be able to get into certain funds that I wouldn't have otherwise been able to. So I work with them. I have alternative investments. I have your basic mutual fund investments, everything from A to Z. And then something I really love doing with this whole space of social media is finding equity cash blend deals. So we know venture and seed investing is massive. We know that having ownership in small businesses that grow overnight is a huge way to build wealth that is faster than anything will pay you from a return on like an S&P 500 fund. So as a result of that, we recognize brand value with people on Instagram and TikTok and everything else. So if we can take that and get equity in businesses, we're reducing the risk of cash injection. We're obviously using our space, which creates liability, so you have to make sure it's credible. But then if we can get a portfolio of 100 small companies and one of them hits a grand slam, now at like a very low risk, we became rich overnight. So that's another strategy too.
Oh, wow. Well, what has been your smartest and your dumbest purchase since being wealthy?
Oh, that's fun. So my dumbest purchase was, and this is exactly what you should not do, is listen to hearsay. I didn't know enough about the whole NFT space, but I knew it was hot, and I heard people buzzing, and I was more worried about my cash inflow and my cash outflows. So I heard about one stock. And I will say this, I had the cash flow to do it, so it's not like I risked it all, but I put it, and I won't blow the stock name up, but I put money into a stock that was very directly correlated to NFTs, and I lost every single penny of that investment. Keith is laughing. He's behind the cameras because he knows that stock, and I think he was in on it too.
But it's not up again?
Oh, it's gone. No, it's gone. The company is gone.
You're talking
and it was
to
publicly
a
traded.
previous crypto reporter.
So you know all about it. Well, now
I do know.
Bitcoin's off the charts.
I do.
But as a result of that, every single penny was gone. And my biggest takeaway was that, like, by the time, and I even wrote about it in the book, by the time it's hearsay, by the time you hear about it, the market's too efficient. It's already been baked in. There are no shortcuts. There are no secrets to this unless you are literally at the top 1% of 1% of 1% of wealth, working at the best hedge funds in the entire planet. You're not going to take shortcuts. And if you try to take shortcuts, it's likely that the long term you're going to get burned as opposed to have a positive return. So that was kind of like my Grandpa Lenny lesson that I learned myself.
That gold rush.
Yeah.
Well, the smartest investment or the smartest way you spent money.
Yeah, the smartest thing that I've done as it relates to spending is something I call behavioral-based budgeting. So 21 years old, not making that much. I think my first was 2010. Like, you couldn't get an offer anywhere. And I got an offer to work in this bank program. And at that time, banks weren't investing in young talent because literally the mortgage crisis. And I got paid $45,000 a year living in Syracuse, New York. And I thought I was the man. I'm like, I got a job. I'm in Syracuse. Like, what? So every Friday, I go out and spend money at the bars and rip it and grip it. Well, I started to recognize cash outflow was getting aggressive. And so I started looking at my last 3 credit card statements for the previous months, and I said, I know I can't drink that much alcohol. Like, how am I spending that much at bars? Did some further digging and recognized the money I'm spending at bars is actually connected to some things I'm dealing with internally. I just was a senior in college, captain of the soccer team, doing fun things, thinking I'm great. Quite frankly, when I got out of school, I was lost. Didn't really know who I was. My identity was shaken. And I didn't have much confidence, and I was very insecure. So I was the guy at bars saying, I got an open bar tab, come to me, I got you. So I actually recognized through analyzing my spending that I had some internal things I had to work on. And so I call this behavioral-based budgeting. It's understanding where you spend money and then being self-aware enough to say, what behaviors are happening internally that I'm spending that money? Because doing that allowed me to plug that gap much faster than being like, okay, stop spending at bars, stop spending at bars. And I think anybody that's listening to this, you just take your last 3 credit card statements, give it a glance over, take a couple deep breaths. And the big purchases, think about it. Was it impulsive? Were you trying to show off a little bit? Are you naturally just a people pleaser and you recognize that you're picking up too many dinner tabs when you need to be splitting it? Are you falling victim to the quick email blast that gets you? You can start to learn about yourself, understand your behaviors so that your budget in the future will change. So that's like the smartest adjustment I think I kind of created on my own from analyzing my spending and then fixing it moving forward.
You see, that would have been my last question. But now that you've mentioned kind of, the love piece, what are your thoughts on going half on dates?
Interesting. I'm naturally, when I look at my behaviors, I am a people pleaser. I've recognized that. So I typically, especially in like the first dates, I take it. I'm like, I got it. But I do feel as though reciprocity is huge, right? So I think for as much as people are giving, they should take and vice versa. I think the big thing though, which connects to the book, is like, just talk about it. So suppose I pick up 3 tabs. Then the 4th tab, now I'm starting to get you. Let's talk a little bit. Like, are you comfortable picking up tabs? How do you think we should do this? Do you think I should take care of the whole thing? In previous relationships, what have you done? When you looked up to mom and dad, how did they handle money? There's so many things kind of like therapy where things that happened from an early age that we thought were naturally the way to do it with the money situation. So I think it just comes back to really talking about it. I think when you're in a more serious relationship and you have 2 income earners, my thought process is take a percentage of your monthly income, put it into a slush fund and use that money. And then what you contribute to that slush fund, I think, again, you have to customize it appropriately, but I think should be pro rata based on what your income is comparative to your partner. So if you make 2 times what your partner is, you guys decide that every month you're going to contribute $500. You put in 2 times more than he or she does, and then you use that as a fund for fun activities.
Okay, good answer.
All right.
Good answer.
I'll take it.
Thank you so much for joining me today, Jason.
Yes. Thank you so much for having me.
Absolutely.